Hey guys, Boris Schlossberg. Welcome to the Commodity Dollar Technical Update for January 9th through January 13th for Aussie dollar, dollar CAD, and Kiwi dollar. And the story in the COM dollars remains the low volatility trade, but there's definitely some very interesting disparities that are starting to take shape. We noticed last week that the Kiwi dollar was showing some relative weakness, and or rather, let me rephrase that. Dollar CAD was showing the strongest relative strength, and it continues to be so this week, with the fundamental data out of Canada coming in strong, with oil relatively strong, still above the 50 level, and it's definitely holding back. I think the broader interesting picture here in the COM dollar complex is the Antipodean trade. The North America versus Asia trade continues to work relatively well, meaning that the Canadian dollar, benefiting from this spurt in U.S. growth, certainly doing much better than the market anticipated. Against a precipitous drop in oil at the beginning of this year, it's managed to survive, and the Canadian economy has actually thrived over the last couple of months, despite a very, very sharp decline in oil prices, versus a clear secular slowdown in Asia. Yet, even within the Asia Pacific region, there were some interesting divergences last week, with the Aussie starting to really pick up speed against Kiwi, because the secondary story that I think is interesting is that the calls for the death of China have been very, very premature. And what I mean by that is that the Chinese economy remains far more buoyant than the market had thought it would be at this point. PMIs are all above 50. Continues to be in relatively strong expansion. We have, as far as fundamental data, probably the most interesting data we have this week is the Chinese data coming out with CPI, with trade balance. We'll get a good glimpse of the idea of just how poorly or well they're able to function. And of course, China is going into the Chinese New Year at the end of this month, so production slowdown, everything is going to just go into a complete stall within a week or two. And I think probably a lot of activity is being front loaded here, just ahead of the New Year's Eve holiday. Still, there is going to be some interesting data here, because if China bears out the thesis that the economy is not doing nearly as badly as everybody thought, it should continue to provide further boost for Australia as far as trade goes. And Aussie Kiwi continues to be, I think, a relative strength trade, a mild but nevertheless interesting relative strength trade on the recovery of Aussie. Aussie has actually pumped itself up all the way up to 73.50 before Friday's back down. A lot of it these days, of course, is a function of just U.S. yields. There's interestingly, the story for Australia, for Canada, for New Zealand, but certainly for Australia and New Zealand, is mostly a story of U.S. rather than organic demand, and that's one of the reasons why I think a lot of local data has not had as much of an impact. But still, when you look at the local data, there's very little reason to believe that the RBA is going to cut anytime soon. Australia seems to be, again, holding its own very well against a slowdown in China. New Zealand may be another different story. It may be subject to yet another rate cut, simply because it has enough rates to be able for the RBNZ to cut rates. But with the Kiwi already down below the 70-cent level, I think the RBNZ is actually probably going to stay stationary as well. So it's very, very low volatility trades in all of these things. We're literally going to be probably looking at a penny move either way the whole week long. If you look at the ranges here, Australia 73.50 is the top side, 72 to the bottom side. The bottom looks relatively steady here. It's really a question whether we can break to the upside, and that's going to be a function of U.S. yields. If U.S. yields start to compress a little bit, the yield differential should help Aussie to push itself above that level. Dollar CAD remains relatively well bid here. 131 certainly was the big support level, but 134 is a pretty decent resistance for the loonie, and I think barring a precipitous drop in oil prices, the loonie will remain the relative winner here on the commodity front. And Kiwi still remains relatively weak. There's no New Zealand data. I think the critical thing that may be worrying the market is we've had 3 straight dairy auctions that have been negative, and that suggests maybe that the demand for dairy prices not as high, or maybe more competitive in New Zealand, and that's certainly going to have a very, very big impact on growth as we go forward. So looking at the charts here, let's take a look at the Aussie first. So former support becomes current resistance to 73.50, very, very clear. But we're really corrected only about 50 cents, only about half a penny. So if Aussie can take out the 73.50, it really doesn't have any serious resistance till 74. On the other hand, the slow drifting bleed down takes us to the 72. 72, 71.50 is a very, very a strong support for the Australian dollar. And it only breaks it, I think, if U.S. yields just go parabolic again. And that seems to be a very low possibility for the time being. Dollar CAD, on the other hand, traded much better. So you see the loonie really, really strengthening from 36 all the way down to 32 before finally bouncing back. Even on Friday, the bounce back was mild. We had a very, very good employment report. It came in at 50,000 against minus 5,000 expected. Still, technically, if you look at dollar CAD, it is preserving its upward path, meaning the dollar still remains bid against the Canadian dollar. And in some ways, I think if you're trading this technically, you actually kind of have to respect the fact that the dollar is up, for more of a bounce here. What would really, I think, solidify this is actually an interesting secondary signal to me. So I said that 1850 breakout would really solidify dollar strength to me in dollar yen. But what would solidify dollar weakness to me, would suggest that the dollar is just not there yet for a full-on second leg of the rally, is if we come back down and take out the 31s in dollar CAD. That is actually a broader signal of a broader dollar weakness that would suggest, again, that the dollar CAD move here is actually distributive, not accretive, meaning that the downtrend is the more dominant trend here now than the uptrend. For now, if you're playing it, the value proposition is certainly to buy the dollar CAD here and basically say, hey, take the risk at around 30.50. If it takes out 30.50, you're clearly wrong, but it's a very small risk relative to the trade. And it does look like we have a series of higher lows, so you have to respect that. But I think the more interesting thing is to simply watch this. If we start to rally back up towards the 33s, I think that certainly gives you a lot of confidence that the dollar rally continues. If we start to fade and start breaking down the lows here, that is actually a very good signal for further dollar correction. So I'd be watching that much more as a signal trade than any kind of positional trade for now. And lastly, Kiwi dollar definitely showing significant amount of weakness here. Big turn on Friday. I think we almost took out the day's lows. It's a bearish engulfing candle. It's a pretty negative technical signal. Certainly give us an opportunity here to possibly move all the way down to 69 as support. 69, 68 is big support. What I think is troubling for Kiwi bulls here is that the level of descent is actually quite significant. You have the correct. You have a series of lower highs, which is a long-term level of descent here, of course, but the counter trends are shallower and shallower. The move back up here was 2 pennies. The move here is barely a penny, meaning the counter trend move. And if the counter trend move can't even make a penny move against it, that would suggest that the Kiwi really has more downside to go. On a longer term basis, I think it's around 68. I think let's just take a look at the weeklies for like 3 years here. No, it's actually, so the low here was around, 66, right? Sorry, we spent quite a long time. It's actually, there's scope here for all the way out to 65 on a full corrective basis for the Kiwi. So Kiwi remains quite vulnerable here, and there's not really as much support as I thought there was. Really 66.50 is the first area, and 65 is the second area of support on a very long-term charts. So overall, though, I still think it's going to be a relatively tight week as far as volatility. Whatever dollar strength we have, you would really have to clear some very serious barriers for me to be convinced that the dollar rally resumes. The more interesting thing here is to watch the COM dollars. And if the COM dollars stage a rally against the dollar, the single most important signal of that, from a technical point of view, is that the yield market, which has been the primary driver of dollar strength, may be exhausted. And if there's more corrective action in U.S. yields, then you certainly can think there's going to be more corrective action in the U.S. dollar. That's why this 131 level in dollar CAD, coming back to this just one more time, is really worth watching. So this is a weekly, but let's just go back to the daily because get a little bit more granular view here. So I'm sorry, it's actually not. It's the 130, 31.50, right? This 130 to 131.50. The takeout of the lows here would suggest that there's much more corrective move in the dollar, and it's worth watching it. So that's how the COM dollars shape up. I wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.